Welcome to a Purple Chips Action Alert. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. I'd like you to take a minute to go through the video disclaimer here. So if you could pause your screen and have a read through that, and then I'll jump into the presentation. Purple Chips. Today we're going to talk about Walgreen. We've got an action alert on Walgreen because Walgreen's earnings came out. We had the third quarter, we've had 3 consecutive quarters of decline in earnings, which is a very bad signal, and it's a signal for us to exit. We had bought Walgreen back in November 2011 under $33. Currently the market price is about $36.20. We've had 3 consecutive quarterly declines, which is a sell signal for us, and because of that, we will not have any buy target until the earnings resume the positive trend. We want to emphasize that Walgreen is an excellent company and it's still a good quality purple chip, but we think the wisest thing to do in this situation is to take the profit and to stand aside. The other reason that sort of motivates us to do this, and we're following the plan, but we are aware that there have been a number of the market's had a pretty good rise, and so I would look for opportunities to take profits, and certainly in stocks like this when there's a clear signal to take a profit. So, and I'll just remind you also that even if we were losing money with 3 consecutive quarterly declines, we would sell at a loss if we were losing money. Now, this is the chart of Walgreen. This is the chart going back 20 years. And you can see the purple line here is the earnings per share line. Of course, a very, very nice pattern. But as I was mentioning, the problem is that you had this situation here where you've had 3 quarters going down. And so this is not a good sign and could lead to some further declines. Now, we know that they've been having some problems with Express Scripts, which they ironed out. So I would expect the earnings to resume their upward trend in a few quarters. But for the time being, we're going to stand aside. We're getting out of the stock. We originally had bought it under 33 at this level, and we're currently trading right up here. So that's a positive exchange for us. We're going to take it. The other thing I'd like to mention is that on this chart that you're looking at, you will see the part on the bottom here. I'll just bring up the pen here. Okay, this line over here in this chart here, what you're seeing here, this is the dividends per share. And this is kind of fun because what it shows you is the rising dividends over the history of the stock. You can't see it super well on this, but you'll just have to trust me that this is a very high quality stock. Actually, I'll try to move this here. So see, now you can actually see the dividends per share, how they've increased over the years. And this is another hallmark that we find in a lot of purple chip stocks. If they have rising earnings over the years, okay, which is the case here, so you see the rising earnings pattern like that, you've got a similar rising pattern in dividends per share. So this is a very encouraging thing, and that's the sort of thing that we look for in high quality stocks. So that's a wrap. That's all for today. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.